Welcome back to Business Basics, Entity Selection. My name is Sean Ferguson of Skill Builder Institute, and I want to provide you with information to help provide clarity when making a decision on what type of business you want to be. So we're going to talk about the different business entity types, and we'll talk about some of the characteristics that they have going for them and some of the characteristics they have going against them. First, we'll talk about the sole proprietor. This is a very common and easy entity structure. Generally, the cost is fairly low depending on the state you're in, and the requirements are fairly minimal. Those are some of the pros. Some of the cons are you have unlimited liability. And what that means is if someone decides to sue your business, then they may have access to your personal assets. And that can be very challenging to swallow as you're looking at going into business. So you want to ensure that you have an entity type that either protects that or you have something like insurance that can help navigate against. The other con against it is that, say, it's only for one person. So if you are looking to get more people to join ownership shares, you would take yourself out of sole proprietor. And the nice thing about being a sole proprietor, is that you can report your earnings right on your 1040 Schedule C, and it allows you to do so. Now, a couple things to note about sole proprietorship. If you decide to operate in your legal name, meaning the name that you were given from birth, then you don't have to do any registration with the state. You're able to operate under that business under your legal name. However, most people don't want to operate under their legal name. They want to use a name that either talks about what the business does, the services it provides, the products it provides, or something that somewhat describes the business. So you may want to give it a name, and that name is, people call it a DBA, but it's actually called a fictitious name. And this is a name that's different from the legal name. So you can operate a sole proprietorship using a fictitious name that will allow you to market it if it's something outside of your personal name. The second entity type that I want to talk about are partnerships. Partnerships are very similar to sole proprietors, except that you're allowed to have multiple members, right? So let's just say I want to start a partnership and I'm good at IT. I have someone that's good at marketing, someone that's good at finance. They all join together a company and we form a partnership. Easy to form, easy to do. Our income is passed through. So based on that scenario, let's say each member is a 33 1/3% owner, then that income would pass through both profits and loss on their tax returns. Now, partnerships are somewhat difficult because partners generally grow out of wanting to be involved anymore. And when they want to exit, there may not be means of exiting that are advantageous to the partner. So there's tension and creates a lot of different issues. So what I suggest, if you are looking at a partnership, to make sure that you have what's called a partnership agreement that spells out all the different things that each partner can do. The next entity type that I want to talk about is a limited liability company. And limited liability company is probably one of the most versatile or most popular entity types. And the funny thing about it, from a federal level, it's a disregarded entity type. And from what that means is that no federal income filing for limited liability companies. Therefore, you have to assume what's already there. So based on the behavior of the limited liability company, if it's a single member LLC, then they can be taxed like a sole proprietor, 1040 Schedule C. If there are multiple members and as part of that LLC, they can be taxed like a partnership. The owner would issue a K-1 and each member would fill out a 1065 as part of their federal taxes. The next scenario is, let's say you have an owner and that owner is taking a salary, a consistent salary and a reasonable salary. Reasonable salary meaning that's words from the IRS. A basic way of thinking about it is if I have a role as a graphic designer in the business and I'm taking a salary for a graphic designer, if I leave industry and get a job as a graphic designer, that salary should be somewhat reasonable to what I make as the CEO. Now, the reason for that, there are some advantages to being an S corporation and being taxed like an S corporation. The other thing to note about the limited liability companies, that they're a lot easier to set up. They don't have a lot of the formalities that a corporation has. So you don't have to have a board of directors. You don't have to have yearly meetings. A lot of those formalities are irrelevant or not necessary for an LLC. There are some challenges with LLCs because they are the disregarded entity. It's difficult to expand out of state because it's up to each state to handle LLCs as the state sees fit. And I've seen an illustration of that. I've lived in multiple states, and each state handles LLCs differently. So it's something that you want to be mindful of if you're thinking of venturing out of state and you want to have a company that has multiple state locations. Maybe you want to consider other entity choices. Another big thing that's a con, can be a con, is liability protection. It really depends on the state, right? So some states consider the LLC totally separate from the owner right from initial registration. But that's not the case with other states. Other states may consider multiple owners protected, where they treat single member LLCs the same as sole proprietors. So ensure that you understand how your state handles LLCs to make sure that you're properly covered. Insurance is also useful for helping to ensure that you have the coverage. So if you do get sued, insurance can pick that up and help litigate on your behalf. The last entity structure that I want to talk about is corporation. Corporation, by default, everyone that registers as a corporation is going to be what's called sometimes a C corporation. And that's just a standard corporation. Corporation, some of the pros, they're totally separate from their owners. So right when you set up a corporation, you're separate from your owners. So what that means is if someone tries to sue the corporation, they can't go after any assets that you may have or own personally, only what's in the business. It's truly separate. Another thing is ownership is determined by stocks. Just like you see public companies in the stock market, same concept applies. Ownership is determined by stocks. So when you start a corporation, you have to determine the number of stocks you want to issue. Cons, you're double taxed, right? So you're taxed at a corporate rate, and any distributions, anytime someone takes that money out as an owner, then they're going to be taxed on those distributions. I won't call this a con, but there are formalities that you have to abide by. You have to have a board of directors. You have to have annual meetings. You have to keep minutes of the meetings. I personally think that that really keeps the business sound, keeps everything up to date. So I don't think of it as a con, but it can become very tedious ensuring all those things are taken care of. Now, the next entity type is really a sub-entity of the corporate entity, and it's what's called an S Corp, or subchapter S is which its words comes from. And it's an S corporation, and there are rules that it has that has to be abided by, but there are benefits that may help you from a tax standpoint. The income can be passed through, which can lessen your tax rate because you have that salary that you have to take, right? We talked a little bit before and talked about how the LLCs, you can act as an S Corp by taking a salary. Well, with the S Corp, you have to take a salary because there are tax advantages that allow you benefits by taking that salary. And it's geared for smaller corporations, not your Googles or your Microsofts or your large corporations, it's kind of geared for the smaller one-man shop, two-man. But most corporations, if you look at, most states, 99% of the corporations in that state are S corporations, and that 1% is just the C corporation. So that gives you kind of an indication on how popular and how widely spread the distributions are. So hopefully that gives you some understanding of the different types. Or if you have more questions or need more information, please don't hesitate to let me know. Please engage, leave comments, like this information, and subscribe to our channel. We'll be providing more and more information to help you as owners have the information you need. Thank you for watching.